There has been a huge development in the world of international politics and energy, and I just couldn't wait to share it with you. So China and Pakistan have just inked a mind-blowing oil deal. And let me tell you, it's a game changer that's going to shake up everything. But why is this deal such a big deal? And what does it mean for the rest of the world? Will this reshape the balance of power in the region? And most importantly, how is it going to impact your life? In today's video, we're going to explore these burning questions and so much more. So don't miss out on this thrilling ride. And make sure to smash the like button and subscribe. Let's start the video. The new oil deal between China and Pakistan is an extension of the China-Pakistan Economic Corridor, or CPEC, which is part of China's ambitious Belt and Road Initiative, or BRI. The BRI aims to create a network of infrastructure projects, trade routes, and economic corridors connecting Asia, Europe, and Africa. Launching in 2013, the CPEC has become a flagship project for the BRI, with a total investment of over $62 billion. The CPEC consists of various energy and infrastructure projects, including the construction of highways, railways, and power plants, as well as the development of Gwadar Port. The new oil deal is an expansion of this collaboration and aims to further strengthen the strategic partnership between China and Pakistan. The new oil deal, also known as the New Silk Road of Energy, involves the construction of oil pipelines, refineries, and storage facilities. The centerpiece of the agreement is an extensive network of oil pipelines connecting Gwadar Port in Pakistan and China's western Xinjiang region. The 3,000-kilometer-long pipeline network will transport crude oil from the Middle East and Africa to China, bypassing the strategic choke point of the Strait of Malacca. The agreement also involves the construction of multiple oil refineries in Pakistan to process the crude oil before transport, as well as investments in upgrading Pakistan's existing energy infrastructure and the construction of new facilities such as oil storage terminals and distribution networks. As part of the agreement, China will also share advanced oil exploration and extraction technologies with Pakistan, helping the country tap into its own domestic energy resources. The new oil deal has significant implications for regional geopolitics and energy security. For Pakistan, the agreement is expected to boost economic growth and provide energy security, reducing its dependence on traditional regional powers, such as the United States and Saudi Arabia. It is also viewed as an opportunity to enhance regional connectivity with the development of Gwadar Port, creating new trade routes and markets. For China, the deal is a significant step towards securing its energy supplies and reducing its dependence on the Strait of Malacca, which is vulnerable to geopolitical risks. The new oil route will provide China with an alternative route to import crude oil, significantly improving its energy security. The deal also reinforces China's strategic partnership with Pakistan and its larger goal of expanding its economic and political influence in the region. The new oil deal may also have implications for regional power dynamics. It could potentially strengthen Pakistan's position in the region by allowing the country to counterbalance India's growing influence. The deal could also encourage the other South Asian countries to seek closer ties with China, as they look to diversify their economic partnerships and reduce their dependence on traditional regional powers. However, the new oil deal also faces several challenges and concerns. The high cost of the project, estimated at around $10 billion, poses financial risks for both China and Pakistan. Ensuring the economic feasibility of the project will be critical for its success. Additionally, the pipeline route traverses volatile regions in both Pakistan and China, exposing the infrastructure to potential terrorist attacks and sabotage. Ensuring the security of the pipeline will be a significant challenge. The construction of oil pipelines and refineries also carries inherent environmental risks, including the potential for oil spills and air pollution. Addressing these concerns will be vital for the project's long-term sustainability. It's also known as the New Silk Road of Energy, a significant expansion of the existing China-Pakistan Economic Corridor, or CPEC. The deal involves the construction of oil pipelines, refineries, and storage facilities, as well as an investment in upgrading Pakistan's energy infrastructure and technology sharing. Here are the key details of the agreement. Construction of oil pipelines. The centerpiece of the deal is the construction of an extensive network of oil pipelines that will connect Gwadar Port in Pakistan to China's western Xinjiang region. The 3,000-kilometer-long pipeline network will transport crude oil from the Middle East and Africa to China, bypassing the strategic choke point of the Strait of Malacca. The pipeline network will consist of both onshore and offshore pipelines, with a capacity of transporting up to 1 million barrels of oil per day. Establishment of oil refineries. The agreement also involves the construction of multiple oil refineries in Pakistan. These refineries will process the crude oil before it is transported to China, adding value to the resources and creating thousands of jobs in Pakistan. The refineries will also help Pakistan become more self-sufficient in meeting its domestic energy needs. Infrastructure development. The deal includes investments in upgrading Pakistan's existing energy infrastructure and the construction of new facilities such as the oil storage terminals and distribution networks. The infrastructure development will improve the efficiency of oil transportation and distribution to Pakistan, reducing energy costs and increasing energy security. Technology sharing. As part of the agreement, China will share advanced oil exploration and extraction technologies with Pakistan, helping the country tap into its own domestic energy resources. The technology sharing will help Pakistan develop its oil and gas industry, reducing its dependence on imports and enhancing its energy security. Financing. China will provide the majority of the financing for this deal, estimated to be around $10 billion. The financing demonstrates China's commitment to the project and its strategic partnership with Pakistan. The financing will be done in form of loans, grants, and investments in various infrastructure projects. The new oil deal between China and Pakistan has significant implications for both countries. For Pakistan, the deal will help the country reduce its dependence on imports and improve its energy security, while also boosting economic growth and creating job opportunities. For China, the deal will provide an alternate route to import crude oil, reducing its dependence on the Strait of Malacca and improving its energy security. The deal also reinforces China's strategic partnership with Pakistan, which is critical to its larger goal of expanding its economic and political influence in the region. However, the new oil deal also faces several challenges and concerns. The high cost of the project poses financial risks for both China and Pakistan, and ensuring the economic feasibility of the project will be critical for its success. The pipeline route traverses volatile regions in both Pakistan and China, exposing the infrastructure to potential terrorist attacks and sabotage. Ensuring the security of the pipeline will be a significant challenge. The construction of the oil pipelines and refineries also carries inherent environmental risks, including the potential for oil spills and air pollution. Addressing these concerns will be vital for the project's long-term sustainability. Strengthening of the Sino-Pakistani ties. The new oil deal is expected to further strengthen the strategic partnership between China and Pakistan. Both countries stand to benefit from increased economic cooperation, energy security, and geopolitical leverage. The deal is part of China's larger Belt and Road Initiative and reinforces its commitment to expanding its economic and political influence in the region. Balancing regional powers. The new oil deal could potentially help Pakistan counterbalance India's growing influence in the region. India has traditionally been the dominant power in South Asia, and the new oil deal may encourage other South Asian countries to seek closer ties with China as they look to diversify their economic partnerships and reduce dependence on traditional regional powers. Tensions with India. The new oil deal could potentially heighten tensions between India and Pakistan, as well as India and China. India has been weary of the strategic implications of the China-Pakistan economic corridor and China's increasing influence in the region. The new oil deal might exacerbate these concerns and contribute to further geopolitical rivalry in South Asia. Impact on U.S. interests. The U.S. has been traditionally a key player in the global energy market, and this deal may be perceived as a challenge to its influence in the region. The new oil route bypassing the Strait of Malacca also reduces the strategic importance of the U.S. naval presence in the region. The U.S. may view the new oil deal as a threat to its strategic interest and its influence in the region. Bypassing the Strait of Malacca. Currently, around 80% of China's oil imports pass through the Strait of Malacca, a narrow and strategically vulnerable waterway. The new oil pipeline will provide China with an alternative route, significantly reducing its dependence on this choke point and improving its energy security. By bypassing the Strait of Malacca, China can avoid the risks associated with geopolitical tensions and piracy in the region. Impact on global oil prices. The new oil route could potentially impact global oil prices by increasing the efficiency of oil transportation between the Middle East, Africa, and China. The reduced transportation costs and the bypassing of geopolitical risks associated with the Strait of Malacca might put downward pressure on global oil prices. However, the impact on oil prices will depend on various factors such as global oil demand, oil production, and geopolitical developments. Increased competition in the energy market. The new oil deal will likely intensify competition among major oil producers to secure China's growing demand for energy. This increased competition could lead to shifts in global energy alliances and the emergence of new energy partnerships. The deal could also increase China's bargaining power in the global energy market, allowing it to negotiate more favorable terms with other oil-producing countries. Boost to renewable energy. As China seeks to diversify its energy sources and reduce its reliance on oil, this deal may serve as an impetus for the country to invest more heavily in renewable energy. China is already the world's largest investor in renewable energy, and this deal could further motivate the country to accelerate its green energy transition. This deal could also lead to increased investments in renewable energy projects in Pakistan and other countries along the pipeline route. The new oil deal between China and Pakistan is expected to have a significant impact on the global energy market. By bypassing the Strait of Malacca and improving the efficiency of oil transport, the deal could put downward pressure on global oil prices. The deal could also intensify competition among major oil producers and increase China's bargaining power in the global energy market. However, the success of the project will depend on various factors, such as geopolitical developments, global oil demand, and economic feasibility. Moreover, the deal could also serve as a catalyst for the shifts towards renewable energy, particularly in China. Financing and economic feasibility. The high cost of the project, estimated to be around $10 billion, poses financial risks for both China and Pakistan. Ensuring the economic feasibility of the project will be critical for its success. The project's financing model must be transparent and sustainable, and the involved parties must ensure that the project generates sufficient returns to cover the costs and generate a profit. Security risks. The pipeline routes traverse volatile regions in both Pakistan and China, exposing the infrastructure to potential terrorist attacks and sabotage. Ensuring the security of the pipeline will be a significant challenge, and both countries must take appropriate measures to mitigate security risks. The security of the pipeline and its infrastructure is critical for the project's success and sustainability. Environmental concerns. The construction of oil pipelines and refineries carries inherent environmental risks, including the potential for oil spills and air pollution. Addressing these concerns will be vital for the project's long-term sustainability. The involved parties must ensure that the project adheres to the highest environmental standards and mitigates any negative impacts on the environment. Political instability. The success of the project depends on political stability in both Pakistan and China. Political instability or conflict in either country could disrupt the project and put its long-term sustainability at risk. Both countries must ensure political stability and address any geopolitical tensions that could potentially threaten the project. Transparency and governance. The project must be transparently managed, and governance structures must be in place to ensure the project adheres to the highest ethical and legal standards. Corruption and lack of transparency could potentially undermine the project's success and sustainability. The new oil deal between China and Pakistan is a significant project with the potential to transform the energy landscape of the region and beyond. However, the project faces several challenges and concerns that must be addressed to ensure its long-term sustainability. Ensuring the project's economic feasibility, security, environmental sustainability, political stability, transparency, and governance will be critical for its success. The involved parties must work together to address these challenges and concerns and ensure that the project generates mutual benefits and contributes to sustainable development. Thanks for watching. If you enjoyed this video, please like and subscribe for more content. Don't forget to hit the bell icon and get notified when we upload new videos.